Okay, Tushar Arora, senior economist at HDFC Bank, is now joining us. Tushar, how do you think the move in Turkish Lira would have an impact on flows? Do you think it's a meaningful one, considering we are quite dependent on the emerging market flows?
Well, I think Turkish Lira has come down and it has affected emerging market sentiment in general, and I think we are seeing some pressure coming in Rupee also since morning. Having said that, our dependency and our elasticity and sensitivity to such moves is kind of low compared to other countries in the emerging world. So I think we should be getting impacted, but not to a degree. Say some of the markets in South America or Latin America might get affected, which are more prone to external risk, which have higher degree of external debt in their balance sheets. So yeah, I think relatively safe, but some impact might be felt.
All right. I also wanted to ask you the fact that the government is also looking at, balancing the economy in Lira. They've given out some statements as well. Clearly, that has had no impact. So by when do you see the situation stabilizing, or do you see it getting worse in the near term going forward, which could eventually have a rub-off on other EM currencies as well?
So I think your question is pertaining to the fair value of the rupee, and I think there's a lot of debate on that front, and there are multiple measures which help us gauge the fair value of any currency. In India, I think if you refer to the RBI's measure, the real effective exchange rate, then the fair value would be more than 70, around 73, 74. The overvaluation is pretty high if we go by the RBI's measure. But if we go by the BIS and some of the international agencies who come up with similar measures, overvaluation might be very low, and I think relatively close to the current values. We have also done our own analysis on this front, and what we do is we assign higher weightage to emerging Asian countries. For example, we assign a higher weightage to China and some of the countries which are emerging as major trading partners and competitors for us. And going by that valuation also, I think the fair value of rupee comes out to be around 68. So I think we are roughly in the safe zone. I think it's not much to worry if we go by that assumption of 68 value for the rupee. Yes, but if it crosses 70, then I think a lot of outflows are triggered. It triggers a risk of sentiment in general, leads to a lot of capital outflows. So that is something which needs to be protected. At the same time, going by the fair value analysis, I think exporters are not getting hit. I think exporters are relatively safe, but you need to control imported inflation. You need to protect capital outflows from that angle, and I think RBI is cognizant of that fact, and to a certain degree the last rate hike was partly, I think, to control such jitteriness as well.
Right, just stay on with us, Tushar. Let's go across to Poonam now. Poonam, IIP data comes out today. What to expect?
That's right, Pankaj. In fact, yes, do expect a better IIP growth this time, Pankaj, because yes, the May month has been slightly slower on account of seasonal trends. So yes, there is some amount of seasonal pickup in terms of the IIP, but broadly also the recovery momentum is there, certainly, at least as indicated by the lead indicators. In fact, if you look at the June IIP, it's seen at 5.5% during this month itself, definitely better than May. We've also seen the lead indicators to be picking up, be the core sector data as well as be the manufacturing PMI data. In fact, the core sector data itself for the month of June was nearly around a 7-month high. The June manufacturing PMI also came in at a 6-month high. We do expect the mining output to be slightly around the 8% or 7 to 8%, but the manufacturing output is still likely to remain below the 4% mark. So yes, definitely an improvement versus the last month, but the overall growth in manufacturing is still likely to be slightly slower. The electricity output, as indicated in the core sector, is likely at 4%. On your screen with the lead indicators, and I'll just request my colleagues to just put it up again. If you look at the lead indicators, even in terms of the vehicle production data as well as the CV production data, definitely uptick in the month of June, as well as uptick in terms of the core sector as well as the manufacturing PMI. So certainly an uptick is there, and if you look at the RBI commentary also, they did point out good amount of uptick both in manufacturing capacity utilization as well as in the broader services economy. So yes, the momentum certainly continues in terms of the economy, but slightly at a slower pace.
Thanks much for highlighting what to expect from the factory output data in the month of June. Meantime, let's come back to Tushar. Once again, Tushar, Poonam just stated that manufacturing is likely to stay sub 4% levels. Is that a matter of concern?
Well, I think if you look at the sequential momentum for the month of June, mining, manufacturing and electricity, all of them are seasonally weak at this point of the year. There's rain and there's a lot of seasonal element which leads to sequential contraction in all three items. But what we have noticed this time is that contraction might be less than what the past trend has been. So yes, overall the headline reading might remain somewhat weak, but the contraction on a sequential basis is less than what it has been in the past, what the history shows. Our headline forecast is also somewhere close to the consensus. We're expecting a reading of 5.2% for the IIP overall, and I think that's a decent jump from last month's reading. Both growth and inflation should be comforting for markets this time. I think you expect a IIP number to go up, you expect inflation number to go down. There we expect a number of around 4.5%. So headline numbers, growth, inflation mix this month should be, I think, cheering for the markets.
Overall, the sense that you get in terms of numbers, you would be tracking a lot of large cap companies' numbers which come in on an aggregate basis. At micro level, numbers were not picking up. Do you think aggregate numbers would pick up? Do you think overall, you get a sense that results will start to come better?
I think results have already started coming up better, although there's a lot of, it's the large caps are maybe performing well. There's the impact still needs to come down on the small scale industries. And even if you look at the systemic level of credit growth, large industries are showing a good degree of uptick in terms of credit numbers. But it is really the small scale industries, the SME sector, which is still not back in full volume. So I think that takes a bit of time. I think GST demonetization had a very deep impact on the SME sector specifically. I think they are gradually coming back, and I think maybe end of this year we should see slowly see all the numbers improving, even the corporate sector results.
I will let you go on that note. Thanks much for joining us with your perspective on the various macro factors.